Hi, everybody. Scott Riley, the Market Update Desk, July 6th. Hopefully, everybody had a fantastic, long, and enjoyable 4th of July weekend. Happy birthday to 50 America. Want to review what happened Friday with the BLS jobs number, go into what we're looking at this week, and touch base on some information here. So, we got the June BLS jobs report release on Friday. A little bit of a surprise to the downside. Showed that the economy only added 57,000 jobs, or half of what the market was planning on. Now, in addition to the miss for the June report, the May and April reports were also revised lower. In fact, May was lowered by 43,000 jobs and April to 31,000. So in totality, that's a $74,000 negative revision to the previous 2 months, which definitely changed the narrative on those supposed very strong reports. Now, education and the health sector, they added 69,000 jobs. Every one of the other sectors combined lost 12,000 jobs. Leisure and hospitality, in fact, fell by 61,000, which was a little surprising because we thought we'd have a little bit of juice from the World Cup. Maybe that was in previous reports. Maybe we'll get that in the August one from July. Now, so that's the headline report. We also have a secondary report, which is called the household survey. And that's where the unemployment rate comes from. That showed that there were 507,000 job losses, so nothing, minus 507,000. So that's a survey where they call households, try to get actual data. Now, this should have caused the unemployment rate to rise, but hold on. Since we lost 720,000 people in the labor force, the unemployment rate dropped from 4.3 to 4.2. On the surface, the drop in unemployment rate looks good, but it's for the wrong reasons. When the unemployment rate drops due to stronger hiring, it's a good thing. But when we drop because more people left the labor force, that's a sign of a very weak situation, or maybe a canary in the coal mine of what could be on the horizon. Now, of the job losses shown in the household survey, 514,000 were full-time jobs. That's not good. Part-time jobs also declined by 53,000. So that's something we got to pay really close attention to. Now, Fed Chair Warsh, I'm sure, is watching this very closely. We're seeing oil drop now, which means we should start to see a decline relatively quickly in inflation. But if we get weaker than expected jobs reports, look for that drumbeat to start again, not for rate hikes, but for more consensus on either pause or a rate decline. Now, we did see oil start to continue to go down, which is very good. It does take a while, though, to work its way through the different sectors of the economy via gas. So once we start to see those sectors getting relief from lower utility prices, we will, as we said, start to get a little bit of relief in inflation, which should help the bond markets for mortgage-backed securities and the 10-year Treasury market. In fact, Goldman Sachs is indicating they're projecting an oil glut and potentially oil at under $60 a barrel. That would be very, very healthy for our economy. Watching the market, we saw the Dow briefly break above 53,000. We slid a little bit, slightly below 53,000, but man, what a tear the last 8 weeks has been for the Dow. 10-year Treasury still holding a pretty tight pattern, 4.483. Now, a week and a half ago, we were about 4.36. Like to see that get through that 4.3 and into the 4.2s, but we'll see on what's going to be upcoming. This week does get a little bit slower on data. In fact, the main thing that's going to drive the market will be a little later in the week when we get the release of the Fed meeting minutes from the last meeting. Also, as with everything right now, the geopolitical could cause either movement up or down. So we're watching that very closely. Other than that, we do get some pretty tame data for this week. We'll keep on top of it. We're working hard for our buyers and for our past clients. Give us a call, 616-293-2189. We'll help you get pre-approved, look at loan programs and options, help counsel you and work with your realtors to help get your offer accepted. 616-293-2189, the Market Update Desk, which of course is your singular original market news source for West Michigan. Have a great week, everybody.